we have Zach Conway, founder and CEO of Seeds Investor. They're a technology platform that empowers financial advisors to deliver a more intentional and personalized investing experience for clients. And Seeds is the only sort of public securities focused company that you'll hear from today. Zach.
Awesome. Thanks, Cooney. And I guess full disclosure, if it's not clear, Cooney and I work together. So wanted to put that out there as we dive in. So great to be here. As Cooney said, I'm the founder and CEO of Seeds. I'm also a financial advisor by background. I'll go a little bit, more into detail on what Seeds is as a platform in a bit. But just to kick things off, we're all obviously talking a lot about climate change, the specific ways we can all, allocate capital to make an impact. It's obviously an extremely important objective. In our business, we're really trying to focus on what we see as kind of the systemic forces that might be holding people back from actually participating. And, we think that's really rooted in how most investors actually understand and internalize the actual function, and purpose of investing. And when it comes to trying to address that problem, I think we're sometimes talking to the wrong people about it. And this was, I think, touched on in the last presentation. We're focused on convincing the end investors, which is obviously extremely important. But we really want to focus on the professionals, the sort of middlemen and women that in many cases manage those investors' dollars, right? So there's tens of trillions, this was alluded to in the last presentation, there's tens of trillions of retail assets, invested in public markets, and financial advisors sit in front of a lot of that wealth. And so those are professionals that, broadly speaking, and again, I'm one of them, aren't educated about this space and still don't engage their clients when it comes to personal values. And the truth is, not a lot of clients are asking for it. Not yet. Some are beginning to. But of course, they're relying on their professional advisors to bring them the latest and greatest when it comes to investing and any other aspect of financial planning. That's the role the advisor plays. Then the advisor perceives that as lack of demand, so they don't offer it. They don't engage their clients and don't discuss those issues. And so the entire industry is kind of stuck in this loop. There was a recent Cerulli study, speaking to this issue. Something like 58% of financial advisors said that the primary reason they're not offering ESG strategies and asset allocations is because there isn't a perceived demand for it. But then, of course, when investors are polled about whether or not, if given the option, they would engage in these types of investments, of course, most investors say yes. So there's a clear disconnect here between the professionals and the actual end investor. And so our perspective on that, is kind of rooted in psychology. And the reason that demand isn't more explicitly expressed from the client is because the conventional wisdom that's kind of ingrained in investors, again, of what is the function of investing. And in particular, in that investor-advisor relationship, that thinking is sort of, a portfolio is based purely on financial metrics like risk profile, time horizon. That's what my advisor is going to ask me. They're going to put my money into a portfolio that they're going to manage so that it hopefully grows, so that I have more money in retirement to pay the bills. And so investors don't really internalize, that there's a secondary effect of those dollars, that they're actually empowering companies, in how those companies operate, how those companies treat employees, treat consumers, how those companies affect the earth. And then mainstream index investing, which is fantastic for many reasons. But the issue with it as it relates to values is it adds this lack of connection to those dollars, right? So when you own a bunch of ETFs, we used to own physical stock certificates. And when you own a bunch of indexed ETFs, there's zero emotional resonance in investing for most people. there's no connectedness as a shareholder. So you're not internalizing or recognizing, or really thinking about how down the chain your dollar is doing something other than just hopefully becoming $2 at some point in the future. So, just an example of that, social justice issues, for example, people marching in the streets over the summer over these issues, which was important. And then if we all looked at what's in their 401k accounts, in many cases, they own private prison companies, just as an example. And they have and many of those people don't know that, right? Because there's no connectedness of where those dollars are going when that money is being managed. Again, that's not because these people and investors en masse don't care. It's because we haven't thought about investing still broadly in that way yet. So in our business, we're really focused on trying to just break that conventional wisdom, right? And we see the success of that hinging on the hundreds of thousands of professional advisors that aren't going to just wait for some explicit express demand, but that see the opportunity in actually being proactive. And so they need to recognize the value of being that professional who, reveals to a client that the conventional wisdom is wrong, right? That's the first step. And then to explain to the client that you don't have to empower a company that's making products that hurt our kids in order to grow your wealth. And that you as the advisor are helping them, at one side of your business, open a donor advised fund to, replant the rainforest through their nonprofit giving. You as that hero advisor are also actively making sure they're not burning it down in their investment account with you. And so having that proactive discussion, that engagement with clients, we think advisors have this really distinct opportunity to change the paradigm for investors across the country of what investing is as a process, right? And so rather than it being investors perceiving it as this cookie cutter impersonal process that only serves one purpose, it's a more meaningful, intentional experience, more in line with how we think about charitable giving that can grow wealth and, of course, align values at the same time. And so, if advisors, from our perspective, really begin to fully recognize this opportunity, we think those trillions of dollars in public markets can then actually really start to move at scale. With all of these other efforts that are going on across institutions, if we can drive this behavior with the retail investors on the ground, we think that's really the key. And so we can all sort of go back to taking one step forward with our individual impact investments, and not worry about the fact that all the aggregate capital out there isn't taking like 10 steps back at the same time. So in the last couple of minutes, just I'll try to touch on, how we think about these issues, how we think about trying to solve these issues and empower advisors through seeds, through the platform. And so in our platform, advisors take prospects or existing clients through this diagnostic process to better understand not just fundamental values, but who they are as an investor. So what makes them tick, things about them that create a more dynamic profile beyond what every advisor asks about the financial metrics, like what's your risk tolerance and what's your time horizon, things that most people don't really think about on a daily basis. And so with that information, our goal is that the advisor then has a better, more complete understanding of who that investor is, so that they're empowered to have a conversation with that investor about values in a way that they didn't feel empowered to do before. And so we've built the platform in a way that's trying to get to what's fundamental. So not things that are necessarily overly specific or thematic, right? If a client's looking to make a specific, targeted, truly quote unquote impact investment, that's awesome. We hope that they're doing that. This is about making sure that they're not negating those efforts through their long-term stock and bond portfolio, right? So it's really important to us that we don't create this overwhelming optionality within the experience. Advisors don't really want to be asking retail clients their thoughts on thermal coal, for example, right? And as humans, we don't necessarily come to the table thinking through that type of lens. And again, even clients that are inclined to create a values aligned portfolio, a lot of them have never considered those very specific issues before. And so we try not to think specifically in those terms. We want to focus on helping the advisor understand how a client thinks about protecting the earth, protecting people, driving corporate integrity, these fundamental concepts that most people, regardless of political affiliation, have an interest in wanting to think about and bring into a portfolio. So, just for example, if somebody's interested in protecting people, the advisor doesn't need that client to look at a list of things to screen out and check, for example, I want to screen out big tobacco companies, right? If you're interested in protecting people, arguably, that would be table stakes in how your portfolio gets created. So trying to simplify that process for the advisor, for the client. And then after the diagnostic, the platform, so within Seeds, we're presenting clients with a multi-asset class portfolio. So on the equity side, we have a basket of individual stock positions. It creates a large cap global core allocation. And so within that, within the way those strategies get created, material ESG risks are our primary inputs, sort of at the top of our funnel. And of course, we see those inputs as fundamental to the investment process, to assessing quality of those companies. And then next to that, we present fixed income allocations through funds. And then we actually just launched for clients where it makes sense, given things like risk tolerance and time horizon and tax bracket, a municipal bond allocation through our partnership with AllianceBernstein. And so the clients will see that total asset class, multi-asset class allocation. So the advisor's story is sort of, I can move you from this traditional diversified long-term allocation to the one that's not going to inherently underperform or expose you to more risk, but now is aligned with what I better understand is actually meaningful to you. And that's what we hope kind of brings the story together. And then the last piece, from an impact perspective, to kind of tie the whole story together, we're presenting impact metrics related to that portfolio. And we want those impact metrics to actually resonate with that client. And so trying to take the inputs of what that advisor now understands about that client to really specifically decide what is being shown to that client from an impact perspective. We don't, in the same way, we don't want to have optionality overload from a screening process perspective in the portfolio construction. We don't want impact metric overload for clients that maybe yesterday had not specifically thought of those hyper-specific issues. So really trying to complete that story and show metrics that are going to resonate. And then, so just the last piece in thinking about impact, we kind of think about it in two ways. So one, of course, is that these clients are now actually empowering companies that do have a positive impact, and they're not, negating what they're doing with specific private impact investments or what they're doing in their charitable giving, with where oftentimes a lot of their liquid wealth exists in their long-term portfolio. And so those things are in alignment, and we create impact in that way. And then sort of the other side of that coin is very often, as I talked about a couple of minutes ago, these investors are moving assets out of funds that very often happen to own some of the worst performing ESG companies, from an ESG perspective. So we get sort of the benefit of both sides of that coin, moving out from what an investor didn't necessarily want to be invested in to begin with, but didn't know that they were invested in, to something that aligns, that's going to have an impact. And so just the final point, through this experience between the advisor and client, the goal and what we believe is the case is that advisor can fundamentally change their value proposition and how their value is perceived, and change the relationship with their clients. And so you, by default, hopefully, are going to talk a little less about performance. Not that performance isn't important, but a little less about, hey, why are we only X basis points above the S&P this quarter? A little less about fees, a little less about, what have you done for me lately? And a little more about, I really want you to meet my kids and talk to them about their financial situation, or my friend down the street. And so, so as we think about educating advisors of this opportunity and how to build relationships with clients, that's our sort of little way of hopefully driving broader impact. So I'll stop there, and obviously happy to take some questions.
All right, great. So I guess just to start off, Zach, softball question here. Talk to us about returns and whether ESG integration should be a trade-off.
I missed the last word, Cooney. ESG should be what?
Should it be a trade-off with returns or not?
Got it.
What do the Seeds returns look like?
Yeah, so just to be specific, within Seeds, the equity strategy on the equity side, the strategies that get created through our rules-based framework have outperformed benchmarks. So we've been, we launched the strategies, I think 14 months ago. We've done really well versus the S&P. And it is not a, so just the direct question of, is there a trade-off? No, we really do think of, we're truly looking for materiality. And that's the way it's presented on the platform to the advisor and to the end client. Yes, there's this incredible secondary benefit, but there is a very clear investment thesis behind why we're doing this, right? These are inputs that we think will clearly, over the long term, have a material impact on whether or not these companies are viable, right? And trying to assess quality through that lens. It doesn't mean that we're not then looking at all of the quant factors that need to be assessed on top of those ESG inputs, but we really think of ESG as fundamental to the investment process. It's part of why, our feeling, our kind of thesis, and this has been echoed already today, we don't like to talk about ESG as a label sort of in a silo, because then it gets perceived across, in particular, the financial advisor community as literally a separate asset class. It's like cryptocurrency. I can put my clients in ESG or cryptocurrency or, whatever, large cap stocks. And so we really, we almost try to avoid the label, because we just consider it part of the steps in our investment process. And this whole thing called ESG, isn't going to exist. It's just going to be traditional investing, at some point soon. So.
Okay. And, talk about the RIA partnership and kind of how you're looking to build that out and, kind of have more conversations with RIAs down the road.
Yeah. So we launched the business to a large RIA partner, sort of our founding user of Seeds as a platform. And so we've spent a lot of time on that relationship. And now we are having conversations with other large RIAs about becoming sort of the next founding users of the platform. So that's really the vision for Seeds, is that advisors at these firms who are really trying to solve several things at the same time as it relates to ESG, right? What is it? How do I talk to my clients about it? How do I bring it into client relationships as an actual client experience and not this thing that sits on a shelf? And then what is the actual investment solution at the end of that client experience? And so that is what we're trying to deliver all in a package with Seeds. And so to answer your question, that's the next step for the business, is having conversations with a handful of firms that may want to partner with us to do that.
And what's the risk that for financial advisors, if they're not engaging with clients on ESG issues, what's the risk that they could actually lose business?
Yeah, I think that's sort of, one of the ironies of the, hey, my clients aren't asking for it paradigm, because there's literally no other thing in an advisor's job description that they would use that as the reason for why they're not doing it, right? So it's sort of embarrassing if your client comes to you and says, hey, shouldn't I, convert this to a Roth IRA or whatever it is. And so we do see, because again, in all of those instances, the client is expecting that you as the professional are bringing them the solutions that are the latest and greatest in the industry. And so as this becomes very clearly mainstream, it's in every financial publication on a daily basis, that risk of attrition is really starting to elevate. So we're still hyper-focused, but those issues are very real. We try not to lean too much into the scare tactics of that, even though that is a very, very clear issue, in particular as the transfer of wealth is really coming to fruition. We really try to focus on the opportunity, right? The other side of that coin is that, and this is, I guess, by default, another issue that advisors are facing. A lot of what advisors do is becoming commoditized, right? So if your value proposition as a financial advisor is, I can, have better returns than the advisor across the street. Warren Buffett has underperformed the S&P 500 for the last decade plus. And so, clients are looking at their financial advisors and saying, I'll go open a Betterment account or a Wealthfront account for half the expense if you're not delivering to me a deeper, more personalized, true advisory relationship. So that's where we see the opportunity side of the coin is to actually prove that differentiation relative to peers in the industry. So both sides of that coin.